and welcome to today's webinar. My name is Peter Frank, and I'll be leading our topic today. Our topic is Layperson's Guide to Managing Church Finances with Church360 Ledger. So this is an overview webinar where we'll go through all the key features of Church360 Ledger, but we'll be doing it from the viewpoint of a layperson. And I'll share some financial terms and some concepts on how churches manage finances. And so if you are a layperson who has no experience, I don't expect you to become an expert by the time we're done, but it'll give you an idea of some of the core concepts and how Church360 Ledger, how that can help you out as you manage your church's finances. So once again, my name is Peter Frank. I'm the Senior Manager at Concordia Technology Solutions. I've been with our group for going on 6 years now. I've been with our organization for a little over 10 years. So I've worn a number of different hats. But one of the first tasks that I had as I moved into the Concordia Technology Solutions group was to oversee the process of developing Church360 Ledger from the marketing side, from the product management side, really, on how to meet the needs of our customers. And so we have a great team of programmers who help build that. My first week, I remember seeing the very initial stages of Church360 Ledger and how it was built out. The first thing we built was testing to make sure everything balanced right. So every change we made, we ran it through that automatic testing to see that it balanced. And so that was a lot of fun. So feel free to reach out to me. I've got my contact information on the screen. It's always good to talk to people who are in the church and active and volunteering, especially on the financial side. The more I can learn, the better, because I myself am not a financial expert by any means. I get involved with church finances and budgeting, and I help numerous churches as customers of ours, but I'm not an expert. That's not my background. So we're in the same boat here as lay people who are eager to learn more. So a few housekeeping items before we begin. First off, I'm planning about 50 minutes for the presentation. So if you have any questions, we'll answer those at the end in the final 10 minutes. But I would say that if you could ask your questions throughout, I'll get a notification up here in my queue telling me how many people I have with questions, and that'll give me a good judge whether I can go over that 50 minutes to present a little bit more information, or if I need to have that hard stop to answer all the questions. Now, this video will be recorded, so if you are watching the recording, thank you for joining us after the fact. I'm sorry you couldn't be here live, but you still get the benefit of all the information. You just don't have that added value of being able to ask questions live. So for those of you who are here live, please do take advantage of that. A little bit about ourselves. We are Concordia Technology Solutions, like I mentioned. We are the church administration division of Concordia Publishing House. Our publishing house has been around for almost 150 years. We'll celebrate 149 years in September. So we're just about at that big milestone, which is very exciting to us. But we have been developing church software since 1984. So not nearly as long, but over 30 years. And so we use the brand Concordia Technology Solutions because that fits this product group a little bit better. You don't usually think about software when you hear publishing. So CTS is the acronym we use. And today we are talking about Church360 Ledger. Now, Church360 Ledger fits into the Church360 suite of products. We call it Church360 because it's complete church management. The other two products in that suite are Church360 Members, which allows you to manage people and attendance information, offering information, and then also Church360 Unite, which is your church website, your digital communication tool that does a number of things, unites those tools together. So you may hear me mention those, specifically Church360 Members, although that's not a large portion of the conversation today. Now, Church360 Ledger, again, church finance software. We built it to be intuitive, secure, and really focused on churches. We don't target businesses for this. Some businesses could use this, but that's not who we developed it for. There are plenty of business finance software out there, some that's very good, and I know some churches use those, but they always rub up against the grain a little bit because businesses operate different than churches, and churches have specific needs, and that's why we built Church360 Ledger. So before I go too far, I have a few assumptions about you that I have made, and I'll validate some of those assumptions in a moment. I'm assuming you're familiar with church finances. If you weren't at least a little bit familiar, you probably wouldn't be here unless you're really starting from scratch and somebody called you up yesterday and said, hey, we want you to take over our finances. That would be a scary phone call to get, but you're in the right place to get started. I do assume that you are new to Church360 Ledger. If you are a longtime user, a lot of this will be refreshment for you. You've already have heard this, you've already experienced it, so there's not going to be a lot of new information for those of you who are experienced. But it is always good to get a refresher course. But I'm specifically targeting those who are new to Church360 Ledger, just getting started or even just considering it. And finally, I'm assuming you're extremely busy. So if you need to step away, if you need to be interrupted, that's fine. This is not as important as the ministry work that you are doing. This is a tool for ministry. This is not your ministry itself. So that's why we're recording it. You can follow up after the fact. If there's anything you need to listen to again, that'll be available to you. So before I go too far, let me validate some of the assumptions by asking you to tell a little bit about yourselves. So I've got a few polls here. The first one here is to select the option that describes your primary role at church. Now, I understand in the church we wear a lot of hats. You might have more than one role. But if you could let me know which is your primary role, that would help me out a lot. And again, I have an assumption. We always put several different items out here, but it looks like just about everybody, almost everybody's on that financial manager, and that's a broad spectrum. But yeah, we've also got at least one pastor in here, so very good. Thank you very much for voting on that, or voting or letting me know who's here. Let me ask this next question. Are you currently using Church360 Ledger in your congregation? Because that'll help me know how deep I should go into the content. And either yes, no, or planning to subscribe soon. Looks like we've got almost a 50-50 split. We've got a few more on the no side, but some on the yes side. I know I often can make these sound like a sales pitch, and so for you who are already using it, please know that's not my goal, is to have this be primarily a sales pitch, but to be a learning tool for you. And for those of you who are not currently customers, it's really to show you the tour, the overall tour of the software, and not do a hard push afterwards. So, all right, the last thing, actually, I'm not even going to ask this last one because it's about your ledger skill, but we've only got a couple people who are currently using it. So I will just move forward from here. All right, so our outline for today. The overview of Church360 Ledger. This is going to be, first off, a slight narrative, and then a quick review of the navigation and some of the key tools. Then we'll get into the tour of the software, and throughout that we'll have the tools and the training for volunteers who are beginning to use Ledger for finance in the church, and go over some of those key terms and really show what that means. All right, and finally, the last one, like I mentioned before, is questions and answers at the very end. All right, so let me first explain the thoughts behind Church360 Ledger. First off, church finances are often managed by volunteers, and we know that. We know that time in the church office is precious, and many of the volunteers don't have that. We also know that most volunteers are not accountants. Now, I have been blessed to be in congregations where there is a volunteer who is an accountant who helps with the church finances. That's wonderful if you have that, but I know not all churches have that blessing. So that is to be understood, and as we developed Church360 Ledger, we kept that in the back of our minds. Sometimes not even in the back, sometimes in the very forefront. Accountability, especially with finances, is even more important in the church than anywhere else. All of the money is received through donations, and that is people giving their best back to the Lord. And so for us not to respect that, both at a software level but at a church level, it's potentially harmful. And so that's where accountability comes in. Building the tools for accountability into Ledger to help you hold others accountable. Now, that could be preventing the ill intention from doing wrong. We hear that, unfortunately, too often, where somebody is embezzling funds from the church or doing poor management for the purpose of benefiting themselves financially. And then that's a terrible, sinful thing that happens, but we live in a sinful, fallen world. So it does happen. And so we've built in some things to help prevent that, although it can never be prevented entirely by software. but more so, we are preventing the well-intentioned from making mistakes. And that's going to be the key for today, is that we look at volunteers. Volunteers who are managing church finances are doing it for the sake of the church, to benefit the congregation, to take this what can be a burden on, because it's not an easy task. And their main goal is to do it right, to not make mistakes, and we try to help out with that as much as possible. So Church360 Ledger was designed to increase that accountability, and especially it was designed to prevent mistakes. All right, so the financial concepts for volunteers that we're going to be going through today, they're basic, but they're critical. They're what everything else kind of builds off of. So we're going to go through the concept of a chart of accounts, the different types of accounts there are, and walk through an example that I think will help with this. Although any single example that we show will not cover all the different scenarios. We're going to talk about budgeting and how and why you should do that. Then we'll get into transactions, and we'll touch on what credits and debits are. And for me, this is the most difficult part of the whole process of financial accounting, and we do a lot to make that easier. So we'll walk through that. We'll talk about why reconciliation is so important, show how to do that in Ledger, and then get into reports. Now, reports is a big thing in the congregations. Usually there are certain people who are used to seeing certain kinds of reports. And so we'll show you how to pull the most critical financial reports and give a little bit of background why they're so important. So with that, let's go ahead and jump in. Now I'm going to switch screens here. I want to make sure that comes up correctly. Very good. All right, now you'll see here, this might be a little hard to see. I got a lot of white space on the sides. This is my large resolution, and so Church360 Ledger starts out there. But just like I can, and here you can do this as well. I'm going to zoom in by clicking Control and scrolling my mouse. I can also do Control and plus or minus to scroll in or out, give you a better view from home or from work, wherever you're at watching this, so that you can see what I'm doing. Now, I'm going to go through the navigation first. We're going to get into settings next, and then we'll jump into the chart of accounts. So this navigation here, you see that Ledger logo up at the top. That always gets you back to this home page. Now, to the right, you have these different books. We'll talk about that in a moment. Sorry, to the right of the logo. I'm still on the left-hand side of the screen. Now, on the right-hand side, you have your print queue, which is for checks. We'll talk about that as we get into transactions. You have your pending transactions, which could be coming from a number of different sources. Then is your reports. Then is your settings, which is where we're headed shortly. And then your user settings, which are just about you who is logged in. And so under user settings, you can update your email, change your password, real basic stuff like that. Now the logo comes from what is called a gravatar, globally recognized avatar, I believe is what that stands for. You can sign up at gravatar.com, I believe, maybe .org, and put your own picture in there, use wherever you're signed in with that email. So basic little thing there, not critical to using Ledger, obviously. All right, so in this white bar, we call this the Omni bar. What this allows you to do is get to any account view quickly and easily. Now, we haven't even got into accounts yet, so I'm not going to jump too far into this until I explain that. But I just wanted to give you that view that you can jump from one account to another just by going up here and typing that in. So it looks like I don't. There's Vacation Bible School. So that's an easy way to jump down into offerings for that or other things. Okay. To the right of this, you have your new transactions. We're going to spend quite a bit of time there, but that also stays up there. So you don't have to go to a separate screen to add new transactions. You can be looking at an account and seeing what your balance is and add in the transaction at the same time, seeing how, or from that view and seeing how it affects that account. You also have here these graphs, these smaller graphs, which show kind of the next level of the navigation, and you can zoom in deeper, and there's always the thing below in the tree, which will make some more sense as we get into chart of accounts. You can also collapse some of that information just by clicking that arrow button there. Every page will have this export to Excel, where you can download an Excel file, and a print button. And lastly, over here, you have your date selector. And there's some predetermined dates like years or quarters or months, or you can set your date range, and then that's at the bottom. So whatever works best for you. For right now, we're going to 2018 year. So that's pretty standard across the board. Now, what you have below here may change depending on what view you're on. Let's jump over here to settings. And I'll just show this cog here before we go too far. So the top half, everything above the line, are things that would be unique to your set of books. And we'll talk about books in just a second. Whereas everything below the line is unique to your account. So your general settings tell everything about your account. Your users are all the users who log into your account. Your roles are the permission levels that those users have. Your books are what we'll get into next, and payees are people that you pay the bills. So you have the shared database. Now, one of the main benefits of Church360 Ledger that I probably should have started with is the fact that it is web-based. It is online church finance software, which means you can access it from anywhere with a internet connection. And that's especially good for volunteers who are doing this in the evenings from home. You might have a regular full-time day job. You can't get into the church office during the day, not because the office won't let you, but because you're occupied with your job. So through having this web software, you can give people access to log in from wherever they're most comfortable, whether that's at home or the coffee shop, or if they go into the church office, they can still access it there. And so that's a key part of Church360 Ledger. Now, the other key part of this is that you can set up multiple books. And so a lot of times in congregations, volunteer organizations will have their own separate chart of accounts, their own separate books that they keep track of. Their ministries are managing their finances separately from the church. And there's a lot of good reasons for this. It could be that there's a desire to have more autonomy over that, maybe not to have so much dialoguing between the ministry leadership and the church staff and having to always be on the same page with that. How you set that up is really dependent at your church. I know at my congregation, our church and school have one set of books, but for example, our men's club has a different set of books, and they manage that separately. So a lot of good reasons for that, but usually you'll see that with the volunteer organizations. Church and school are kind of the exceptions. Sometimes they're together, sometimes they're not. Usually there's always paid staff managing it in some way, shape, or form. But certainly the other ministries are volunteer-led. But let's go ahead and create a new book, and we're going to call this one, we're already thinking about summer, so we're going to call this Vacation Bible School. And we're at Christ Community Church, and so I'm going to put CCC Vacation Bible School. And we'll just go ahead and add that. Oops, that was the search box. There we go. Starting year, we're going to start in January because that's kind of when VBS planning starts. So that's the starting month, and the starting date is the beginning of book activities. So the starting month is just starting your fiscal year, but the starting date may be the date that you started using Ledger. So there we go. We'll go ahead and submit that. All right, that book was created, and now we're going to go up here, and there's CCC Vacation Bible School. And I'm showing this at the beginning. Oops, I should probably actually click on that. That would be helpful. I'm showing this at the beginning to give a blank slate view. We're going to switch back to the church in a little while when we get into some of the more detailed things. But I wanted to show this here so that you can get a feel for how you'd start the setup process, and especially as we get into types of accounts. So I'm going to go here to Settings and Chart of Accounts, and you'll see a blank slate. Now, I'm going to jump back to my PowerPoint for a second and go through these types of accounts, because if you're a volunteer who is not familiar with this, this may be, well, for one, this is one of the most important things you need to know at the beginning, but this may be a little bit of a tough concept, because if you're used to balancing your checkbook, you'll know a little bit about these, but maybe not by these definitions. And certainly as we get into income and expenses, like those concepts are common, but how they apply in this setting might be a little different. So let's begin. First off, there's 4 types of accounts. The first type is assets. Assets are real money that is located physically somewhere. So a great example of this would be your bank account. Now, I know that you're not depositing gold coins and having it sitting in a deposit box waiting for you to come back. I just mean that there's real tangible value wherever you are storing this, and that's often bank accounts. It might be your petty cash fund or things like that. But this is real life money, and the balances should match with the balances there. As we get into reconciliation, that's what we're talking about. Now, on the flip side, there's liabilities, and liability accounts are real money that you owe. Now, this could be something like a mortgage. It could be a credit card debt. It could be that you are setting aside dollars for taxes that you owe to the government that you pay out on a more periodic basis, not every payroll, things like that. We're not going to get into payroll today because that's far more complicated than most of what volunteers need to know at the beginning stages. So those two kind of work hand in hand, and that it's real money that has real life tangible value. Some of it you have, some of it you owe. Now, on the flip side, you have income, and income is money that is coming into the church for specific reasons. But the way you divide these accounts is not based on where the money is located, but how the money is going to be used. Now, if you're new to this concept, this might take a few minutes for it to sink in. And when I show you an example of how we set up the chart of accounts, I think that'll help. On the flip side of that is money that is going to be spent. So expenses. And those concepts, income and expenses, incoming money, outgoing money, that's pretty common. But when you look at these two groupings and knowing that they're used in different ways, one's where money's stored or owed, one's how money is going to be used. Now, the way that proper accounting works is that these two should always balance. So your assets plus liabilities should equal your income plus expense. And that's at least in terms of the transaction changes. You may have beginning balances that don't equal out, but in terms of the changes over the course of the year, that needs to balance. And this will all make more sense as I get into practical examples. All right, so we're going to go here, and this is our chart of accounts in Church360 Ledger. So as you click on either one of these, it kind of expands or contracts. Now, you can't see too much right now. We have no accounts. You have two ways of adding information in here. So one is new accounts, where money resides, where transactions can take place, and others are categories, which are groupings of accounts. So we're going to create an asset category, and we're going to call this the bank. And we'll make it really simple. So next, under new account, we're going to call this the checking account. Now, you can put account numbers in there. They're not required. They could be either the account number that you have at the bank, or if you're coming from another system and you're used to using account numbers, it could be those account numbers. So it really just depends on how you want to use it. Well, checking account, you can certainly write checks from, and we're going to do an initial balance of $500 and submit. Oops, and I already spelled checking wrong. Very good. All right, next I'm going to create a new account called savings, and I'm not going to put in an account number, and the initial balance will be $1,000, and I can't write checks from that, so I'll submit that. Now you'll notice these are all at the same level, so I'm going to click and drag and bump them out, and now you can see they all roll up under banks or bank. So your bank account, which has two different accounts, sums to $1,500. So I'm going to go ahead and save that, and it'll tell you exactly what's going on. Confirm that. That is saved. All right, now let's go into liabilities. This is a very basic example. We're going to come back to assets at the very end. So liabilities is money you owe. So we're going to say, first off, credit card is our category, and the account. We're just going to call this Visa. And we won't put in a number. The initial balance is that we owe $250 on that. Now, I should note that when you're talking about balances, because the type of account indicates whether it's owed or you have it, you still always put positive numbers because it's going to be assets less liabilities. and that shows your total, which if you did it as a negative, then assets minus a negative would add it together, which would be incorrect. So I hope that makes sense. This is times where maybe a whiteboard or something would be good to draw that out and give an example. All right, so I'm going to drop that over under Visa. If I had my Visa under credit card, push it over to the right a little bit so it summarizes. If I had another account, I could put that under there. I'm just going to go with these two for right now. So we'll hit Save Changes and confirm. And I always like to do, like voting in Chicago, save early, save often. It's better to have that saved. It will notify you before you move, but if you're like closing your web browser and you ignore the signals, you don't want to lose anything. So there we go. So assets as our bank, our real money, we got $1,500 there. Liabilities as money we owe $250 there. All right, flip sides now. On the income side, we've got a couple different categories that we can create. So we could create offerings, or you could call it donations or anything like that. We're going to go ahead and submit. And then we're going to create a new account, and we're going to call this one General. And we're going to start at 0 here. And then we're going to have another one that's called VBS. And we'll start with a 0 account balance there. And then lastly, we're going to make it more specific and do VBS crafts. So if people want to donate directly to the crafts. All right. Since this is a VBS account, General and VBS are probably going to be used in the same way, but that's all right. So there's offerings. Those are different types of offerings. Now you could add another category, and you could call this income. Well, let's call this other income just to make it. When I hear donations, I think gifts. When I hear income, I think earned. And so in this case, we're going to create another one for snack sales. So let's say snacks wasn't actually free at your VBS. You charged for it. That still would be money coming in. It would just be under a different category. All right, so snack sales, we'll do that. We'll save this. There's my update, confirm. All right, now we'll go into expenses. New category, we're just going to call this VBS. And I add a new account called, let's say, Starter Kit. Oops, I got to put in 0 balance. And we're going to do another one called Crafts. And another one called Snacks. All right, now I'm going to bump them over. They're all at 0 right now. And hit Save Changes. So a very simple example. I now have my chart of account filled out with accounts under each one of these types of accounts. Now there's one other type of account. We call it a restricted fund. It's not really a type of account as much as a division of accounts. So we've got our savings here. If we go and create a new restricted fund, we could say that we want a restricted fund for our mission project. And any money that gets donated to the mission project will get set aside, and it'll get put in savings, but it'll be for that very specific reason. Now you can see here, as soon as I created a mission project, I had an unrestricted account created under savings. That's money that I can spend, that's unrestricted, whereas mission project is restricted. Now I can always add more restricted funds to it, but only after the first restricted fund does unrestricted appear. So that's it right there. Let's go ahead and save these changes and confirm. While I take a sip of water, because I'm already losing my voice after half an hour. If you have any questions, please go ahead and put them into the chat. We'll be getting to those at the end, but it's a good time to remind you that as you're thinking about it, if you have any questions, go ahead and put it in. All right. So next up, what we're going to do is talk about budgets. Now, budgets are planned income or planned expense. Your goal is to end the year, at least at the church, on a balanced budget, if not with a little bit of surplus. Now, there's some years where you might not have a surplus. You might have a deficit at the end where your income coming in is going to be less than your expenses. But in most churches, the goal is to balance it so that your income and expenses match. You don't need to have too much of a surplus in a church as long as your operating expenses are recovered and balance out with your income. So when you go in here, budgets only shows you income and expense. And the screen will go to the full width, although at a certain point it stops. So I'm going to zoom in a little bit just to give you the full width of the 12 months. Now, the lines that are darker gray are just totals, and the lines that are lighter gray can have things entered in. So if we wanted to go ahead and say, okay, well, every month gets $25 to the general fund, you could go in and type all of that. Now, what you could also do is go in here and say, all right, $400 for the year. Actually, that'd be $300 for the year. There we go. And it's $25 a month. This is why I have a software that does the math for me, because I cannot do it easily in my head. You'd think that a simple mathematics like that, I could, but I'm so dependent on the computer. All right, next up, VBS specifically. And a good time, you could do it by month, but a good time for that might be in the spring. So maybe you get 500 in April and 500 in March and 1,000 in April and 1,000 in May and 2,500 in June and a few stragglers in July. And you're getting $5,500 in offerings for VBS. And maybe you've got one person who every year with their Easter offering in April donates $150 for crafts, and that covers you for the year. So you don't need to do all of that. So now you have your total there of $5,950. There we go. Now your expenses should match that. And so maybe your starter kit, which you purchase in January, is $250. And your crafts, which you always purchase with that $150 the month afterwards, you put in for May. And then snacks, well, you probably don't need all of the other amount, but let's say you start stocking up at snacks at $100 a month. That's pretty nice snacks. Maybe you've got just a lot of kids coming to feed. All right, we'll just do that through July. Now we have what's called a surplus because our income far exceeds our expenses, but we don't have a complete picture. There should be other expenses, I'm sure, that we're not factoring in here. So I'm just going to leave that as that. But you can see that at the bottom line, income less expense. Now you notice we didn't do anything with assets and liabilities because assets and liabilities don't get budgeted. They are dollars at a specific point in time, whereas your income and expenses, money that's coming in and going out, moving money. And so that's what you would budget under. Here is that movie that's coming in and going out. That money, I think I said movie, pardon me. All right, very good. So that is budgets. The next step that we're going to get into is transactions. And this is the meat of it. I'm going to click the Ledger button here and go to the home page. And you'll see that the only transactions we have are these initial balances, these beginning balances where we're adding on to the amount. Now, these transactions are a little bit different. When you click on it, you have what's called equity. And this is an internal tool, and you can't edit these either. That's why they're a little bit lighter. In fact, I am going to zoom in so you can see everything. Equity, it's a concept that I don't need to get into from a beginner standpoint because I think it's going to get too confusing. Other than to say, for those of you who are experienced accountants, we do always keep a transaction for everything, even beginning balances. All right, with that, let's go over here to transactions. If I click on new transaction, I have 5 options there: transfer, deposit, payment, check, and journal entry. Now, journal entry is the most difficult of this group. This is what you would call T-chart accounting, where you have debits and credits. Now, I'm going to get a little technical here, and I'm not the expert at this either, so please pardon my layperson's definition of credits and debits, but it's meant for other lay people, so we're going to try to speak the same level, or speak at the same level. So here we go. Assets, liabilities, income, and expenses are on the far left-hand side. And then debits and credits are at the top. Now, if you think about this as a debit card versus a credit card, which is the common everyday language that we have here, that's going to cause some confusion, or at least it did for me and for other people that I talk with. So try not to think of it in that way. Think about it as changes to the accounts and where you would track that. So if you are going to debit an asset account, that means you're going to increase an asset. And if you're going to credit an asset, that means you're going to decrease it. Vice versa, if you're going to debit a liability, it will decrease it, and credit a liability will increase it. Now on the flip side, income and expense. So if you're going to debit an income, that means you're going to decrease it, whereas crediting increases, and vice versa, increasing expense by debiting it, decreasing expense by crediting it. All of that is fun and confusing. It'll make more sense as we start looking at that. So let me go back here. The journal entry lets you say, here is first off a memo. And we designed this to look kind of like your checkbook, because even though checks are kind of a thing of the past, many people who volunteer for church finances are used to that. And so we do the design to make that seem that way. Memo is always a good thing to put in here, and we're going to call this moving money from, let's see, savings, let's say unrestricted to restricted. Oh yeah. And I forgot there is a character limit on that because of where it shows up in a report. So we're going to do that for today. And there is really no payee because the church is the payee. You don't have to put that in there. All right, so let's go back to this. If we are going to transfer from one asset to another asset, so we're taking from unrestricted to restricted, you want to increase that unrestricted, so we're going to debit it, and increase the restricted, decrease the unrestricted. A lot of the same kind of words here. Let's show what that looks like. All right, so here are our two things. Our unrestricted is and then our unrestricted is savings. Within savings, our restricted is mission projects. So we are going to transfer, let's say $250 from unrestricted into mission project. So we need to decrease this, and this is the asset. Both of these are assets. So we will decrease by crediting and increase by debiting. So we'll jump back here, and we are going to decrease the unrestricted, and we're going to increase the restricted. Now, as I type those in, you can see at the very bottom, we get the total there, 250, 250. It's green, they match. This is a valid transaction. This is actually what you would call just a transfer between two accounts, but you have to put that in and balance that correctly. So I'm going to go ahead and save that, and we're going to go and take a look at the account balances. So we'll go to assets and bank, and then savings, and then mission project, and we've moved it over. So if we go back, we had $1,000 under unrestricted. We moved a quarter of that to mission project, and you can see that there in the journal entry. All right, if you are saying, wow, that is really confusing, I'm never going to be able to get this, good, because that's how I feel when I'm doing journal entries. That is a very common reaction if you don't have that credits and debits ingrained in you. And I even have a little thing up at the top on my bulletin board, so I can always look back at it. It's difficult. That's why we do things differently in Ledger. We make that available because journal entries are a very important thing in financial accounting. But let's go up here and we'll go to transactions and we'll look at transfer. So that's the first one. So what it says is up at the top, you've got your memo and your date, just like always. And then you have your assets and your starting account and your secondary account. So let's say we're going to do this again and move another $250. Well, we're going to start with unrestricted savings, and we're going to say we're going to transfer $250 to mission project. And if I do that, I get the exact same transaction down below, but I didn't have to think about the credits and debits. And for me, that's really good. Because again, I always have to go back here and think, okay, if I'm going to increase and decrease, I have to move it. Now, if you use these transaction paths and follow those paths nicely, it's going to do these transactions for you. And so now I can go ahead and click save. And that's done. It's that much faster. Trust me, for a volunteer who doesn't have a financial background, this is going to make life a lot simpler. Let's go to the next one. We're going to do a deposit. So let's say we got offerings that we're going to put in the bank account. All right, so I'm going to put in offerings from Sunday. And today's Tuesday. Let's say that this was actually done on Monday. I'll put that in there. There is no payee because it was from several people. So the asset account is, I'm going to put it into my checking account. We had $500 come in, and most of that came under VBS. In fact, 400 of it did. But some of it came under VBS Crafts. 50 of that did, and that tells me, all right, if you're going to balance this, you have $50 remaining, and so the rest came in under general. And so now I have this balanced transaction. My assets and my income align, and I didn't have to think about credits and debits because I said, all right, I'm making a deposit into my asset account, my checking account. And notice that it only gives you access to those asset accounts. And it gives me this nice transaction. I'll go ahead and save that, and that's been done. Now let's do a new transaction that's a payment. All right, so where am I paying from? Well, I'm going to pay for checking, and we're going to call this the VBS Starter Kit. You can see that I've used this example before, and we're paying for today, and my payee is Concordia Publishing House because our Splash Canyon is coming up this year. And I don't remember the exact amount, but let's make it really cheap. I think it might be more expensive than that. I have $100. I'm pretty sure it's more expensive than $100. That's a really good deal for a starter kit. So I'm going to spend $100 from my checking account, and I'm going to mark that as being the starter kit. And again, it leads me down this path. It says, okay, what are you doing? Are you taking it from your checking account? Are you, it also gives you the liability. So let me go back here. If I close that, are you taking it from your checking account? Are you taking it from one of these restricted or mission projects? Or maybe your Visa card, a liability? And it still goes that same route because it does the credits and debits correctly. And those are meant to work out so everything aligns. Ledger does this so that you don't have to think about it. And so if you are going to put it on your credit card, do $100, now all of a sudden I owe $100 to my credit card company, but that is tracked. And so my expense already occurs. Now let's say I'm going to do my, my payment to my credit card company. You do the reverse. You say, okay, where am I paying this from? Well, I'm going to pay from my checking account, $100. And I'm going to pay off my Visa, which is a liability, and that's $100. And so it's doing the credits and debits correctly. I click Save. And now if I go back to Home and Liability, you can see I started off with a balance of $250, so I haven't paid that off totally. Maybe I should have done that. It's always good to pay off your credit card on time. But it balances that out. So there's my payment to Concordia Publishing House, and there's my payment that pays off my credit card, or at least that one bill. So I hope that makes sense. The next thing that we're going to do is going to be really shifting the type of transaction. So those are the three big types of transactions: transfer, deposit, or payment. Withdrawal is another way of doing that. And so depending on how you, that's a common type of transaction, but it's really a payment, except I guess it's more of a transfer. You'd be taking money out of a bank account and putting it in some kind of cash account. And then if you spent that money, then that would be a transaction, that would be a payment. Checks are very similar to payments. I mean, they are payments, except there's this added functionality of being able to print checks. So here, we'll go to checks, and let's say we need to buy the VBS Crafts. And so we'll do VBS Crafts, and of course we're going to Concordia Publishing House. And I don't know my check number yet. I'm going to do my checking account. We're just doing $75 worth of crafts, and I'll just put that there. And so that factors out. It gives me an example of what my check would look like. So if you're thinking about how would you write it out, you can double check it here. And then again, the credits and debits go correctly. So now I'll hit save. Now the transaction has happened. according to our accounts. But it's not printed yet. It shows up in our queue. So here we go. You see a little 1 up there. You can also see on the left by the transaction, it's not printed yet. So if I go to my check queue and I select this check and I go to mark as printed, it's going to give me a quick preview of what it'll look like. This is my top check, and then I'll hit print. Now it says, what check number do you want for it? 1, 2, 3. Confirm, and now it goes to my print view from my browser, and I can send this directly to my printer. Now we work with a great organization for pre-printed checks called Forms Plus Inc. They're based out of the Atlanta area in Georgia. And you can get your checks there. You can do the top check or the middle check, but this makes it really easy to make your bills or to pay your bills, and that it's going to have all your information at your bank account, but it's going to have the extra security, and you can print it out here. And they all come pre-numbered, and so you don't have to write in the number, but you do have to put in your number into Ledger. All right, so I'm going to hit cancel here, just because I don't actually need to print it, and I'm going to mark it as printed to kind of clear it out of the queue. One item will be removed from the queue. There we go. All right, so then when I go back here, you can see that now there's check 123, and we remove the not printed sign because it's already been printed. We don't have to talk about that anymore. All right, another type of transaction tool is making reoccurring transactions. So let's go and make a deposit. Let's say you're paying AT&T UVerse for internet, and you got to take your share of it as a VBS. We're going to put it under checking account, and we're just paying 25 cents or $25 off of it. Now we haven't created an account for that, and you'd have to go back to your chart of accounts if you're going to do internet. For now, let's just do snacks as the example. And so let's say you're buying snacks from AT&T. That's an interesting approach. But let's say that's just a reoccurring thing. Every month, it's $25, same kind of thing. If you hit make reoccurring, it's going to give you the schedule. So we'll say AT&T bill every single month on the first Wednesday. Save. All right, so now that is saved as a recurring transaction. When that occurs in the schedule, so that Wednesday when it comes up, it'll show up under my pending transactions. I can also go to settings and recurring transactions to see all that I have and edit it there. So the first Wednesday of the month, it shows up as a pending transaction. Now, a few other pending transactions. If you use Church360 members and you've entered offerings through it, you can click on there and see all the offerings. If you use our payroll import from Paychecks, that would show up in there. If you go and do imported transactions, you can import the Paychecks file there. All right, so I just noticed my time, I'm running short. So the next thing I want to do is get into reconciliation. That transaction part of it, how it ties to the chart of accounts, the credits and debits, is a crucial part of Church360 Ledger and making it easy for those who don't understand those concepts. The next thing is a very familiar thing for volunteers, and it's essentially balancing your checking account. So if you go to assets and we go to the bank account, and we go into our checking account, any asset account. Now, actually, let's go back. I want to show the savings account because we have other accounts underneath this, unrestricted admission fund. But this is our asset account. The money resides as a $1,000 total in the bank. So I get this reconcile button. And when I click reconcile, it takes me into the reconciliation mode. So if you're getting your bank statement, either a physical bank statement, an electronic one, you'll show the starting and ending balance for that time period. And so your starting balance may have been 0, and your ending balance may be 1,000. And then you would click through here and check all the transactions that are on your bank account, and they should add up. If they don't add up to match that difference, you've missed something, or maybe there's something total. But once you get that all, it's off by 0. That means you've balanced. You've reconciled your records of this account with the bank's records of that account. And again, that's just balancing their checkbook. That concept is very common. Hopefully the action is very common too, but at least the concept is known. That's one of the first things my mom taught me when I had my first checking account when I was like 12, just to balance it, make sure the money's there, make sure you're looking for mistakes. That's what reconciliation is. So we'll go ahead and save that. And that starts to get us into reports now. Now, there's a number of reports in here. And actually, I've got enough data. I don't need to switch. I was going to switch back to the church account for reports, but this will show enough. Let me show you the 4 main types of reports, and then we'll wrap up. And I want to make sure, I'll go back to my outline. Just to show you, I always like to do this before the last one. Chart of accounts was first, budgeting was next, transaction was a bulk of our presentation, reconciliation was last, and finally, we're getting into reports. All right, we are at 150. I've got one question in the queue, so I'm going to keep going past this because I want to show reports. So you have your general ledger report, which is taking all of your different line items and putting them in one standard view. And allowing you to filter and group. So if you wanted to see all of your checks, you can go here and type is check, and then you could just do your checking account. And this becomes kind of a check record for you. You could do all, and maybe you want to do all transactions, but group it by payee. You could click this little group button, and it would show you all of the ones that have no payee and all of those that are CPH, and show all those transactions. And you could group it more and say, okay, just show me my checks to Concordia Publishing House from my checking account. And there you have. So it's a great way to filter and get down to information that you're looking for. This is also, we'll ungroup. This is also where you can go. Actually, no, this isn't. It's the event log where you can go and get your reconciliation report. Let's look at the next one, income and expense. This just shows your income and expense accounts and shows the income less the expense. So you have your budget, you have actual, your percentage of budget, and really what's remaining to get there. So a negative number is a little confusing because it really is going over your budget, either on income or expense, but it's just important to know what the math is doing there. Chart of accounts is very similar in terms of listing all your accounts there, and you can collapse them by clicking on the arrows, but you get all 4 types of accounts. You get the starting balance, the ending balance, whether the credits or the debits adjusted it, the total change, and the total percentage. So it really gives you a good idea of how things are changing over this period. It's all based on your time. Lastly, the balance sheet. This will show your net worth, if you will. It's your assets less your liabilities. And the same kind of thing, starting balance, ending balance, debits, credits, change percentage. Now, this event log is not really a report as it is a log of things that have happened. And it can sometimes take a little long to load because every little thing that happens gets tracked. But this is available for you, and sometimes it's really slow. Do a quick refresh. Well, yeah, I've had issues with it being slow before. Oftentimes when I'm doing a presentation, that's because it's streaming live, it slows down my internet more than normal. Although the ledger view or the event log does show a lot of different things and pull things together, and so that can make it a little bit difficult. So there we go. Now it showed up. And the last thing on there is that reconciliation. And so if I click on that, it shows me exactly what happened. Now, there's a number of other things that I could show you. But before I do that, I want to, and really I'll just take questions. So if you have questions about something I haven't shown, just go ahead and ask. So we'll get back into our credits and debits. There we go. So the next slide on here, if you haven't already started, I know many of you are still new, you could start your free 37-day trial at 360ledger.com. Now we do a 37-day trial so that you can do 1 month of transactions and have 7 months to reconcile, or 7 days to reconcile at the end of that month. So that's why we do it 37. It's kind of a fun number just to put out there. The next thing I want to indicate, and this is running short on time, if you subscribe by February 28th, which is tomorrow, you'll save $199 on the startup fee. Now, we've been running this promotion for 2 months. I'm assuming most of you have heard about this, so just take this as a reminder. If you are watching this after the fact, please know that is a hard and fast date, but we run these promotions occasionally throughout the year. All right, finally, there's my contact information. You can reach me most of the time. Email is the best way of doing it, but sometimes my phone is good. It's right in there. I'm often not right here. So these webinars are sometimes the time where I spend the most time in my office. But you can also speak with one of our software consultants. They are at their phones most of the day. They are more than happy to talk, and you can also email them and get a very quick response. All right, so question and answers. We've got about 5 minutes left for that. There's one other thing I could show you that's kind of neat about editing transactions, but I want to answer this first question. So Sarah says, I import our info from Shepherd staff. We use dedicated accounts. I had to add some income and expense accounts to make my transactions balance. How did I determine the beginning balances, or how do I determine what the beginning balances are for those accounts? Well, Sarah, I'm not sure if I can answer that based on that information alone. Dedicated accounts are Shepherd staff's way of handling what we see in Ledger as restricted funds. They have a fifth type called dedicated in Shepherd staff, which is our PC-based church management software. The transactions behave differently. We can't import them all without having that dedicated account. But I would suggest in your unique situation, Sarah, rather than me trying to speculate on the best way of doing it, because it will really vary depending on the type of accounts, our support team is the best to handle that. And if you're still going through onboarding, you could talk to an onboarding specialist. They'll be able to help you out as well. But I don't think I can give you a good enough answer there to really help without digging into the details. So, but I did want to clarify, because Sarah brings up a good point, that if you're coming from Shepherd staff and you're using dedicated accounts, you do have to account for it differently. The reason that we have income and expense accounts with that, and actually the short answer might just be that it's zero. It really depends on your where you're at your fiscal year. But you're creating these income and expense accounts to have this balanced transaction with your restricted fund that you're creating under assets. So that's why that gets a little complicated. If you already have transactions under your income and expense account, that's where I'm not sure exactly to tell you about the beginning balance. It's based on the dates and all that. So I apologize, Sarah, for not having a more thorough answer. That's just a complicated question. So one more time, there's my contact information. I have no other questions in the queue, so I am going to go ahead and wrap up. But I wanted to thank you for joining me today. I hope you can see how Church360 Ledger is designed to really make life easier for that volunteer who has little to no knowledge of finances, but has the willing spirit to help out. And our goal is that we help that person prevent that person from making mistakes due to lack of knowledge by really making it easy to set up the accounts, easy to do the transactions, easy to reconcile the accounts, and even easy to report on things. So thank you again for joining me, and have a great rest of the day. Goodbye.